New listing volume each week is now higher than at any time last year. It's still April, so there could be as many as 8 more weeks of seller growth in the spring market. Seller growth is happening pretty much everywhere across the country now, with Florida and Texas leading the way. There are two ways to interpret this fact. The bearish take is that there are obviously way more sellers than buyers and inventory is building, with rates at 7.5% and no signs of improvement anytime soon. So that implies maybe home prices could decline in the near future. The more optimistic take is that these more sellers will result in more sales. So even if the imbalance of more sellers than buyers continues, more sales will happen, especially compared to last year at this time. So maybe both of those interpretations actually could prove true, because in addition to new listings, there were also more new contracts started this week than in any week of 2023. So that's not saying much since last year had so few home sales, but it's a step in the right direction. Is it that is this from people rushing in to get the deal done before market conditions and interest rates deteriorate further? Mortgage rates are now at 7.5%, the highest levels for the whole year. You'd think that the sales rate would be slowing, but we don't see signs of purchases slowing further yet. I continue to expect sales volume to slow. Maybe it just takes a few more weeks to manifest than we had originally expected. And that's why at Altos Research, we track every home for sale in the country every week. The data so often defies expectations and changes very quickly. So we track all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's take a look at the details of the U.S. real estate market at the end of April 2024. So there are now 556,000 single-family homes unsold on the market. That's up 2.4% on the week. That's just over 13,000 more single-family homes on the market now than a week ago. Unsold inventory now is almost 32% more than last year at this time. It's 90% more than 2022. So at that time in 2022, inventory was really jumping along with mortgage rates. And that's not what we have now. Now we have sort of steady increases. And this is how I like to illustrate that consumers are more sensitive to changes in rates than to the absolute levels. So rates are higher now, so unsold inventory is higher. But 2 years ago, rates were climbing like 20 basis points a week all spring. And as rates were climbing rapidly, so was inventory. So now the increase of both of those lines is slower. So in the inventory chart, you'll see the light red line from 2022, 2 years ago, near the bottom. Record few unsold homes on the market, but climbing rapidly. At that time, we were adding 18 or 20,000 homes each week unsold. Now we're adding 13,000. So while interest rates are climbing now and inventory is building, 2 years ago, rates were really moving and inventory was really building more quickly. So the change in rates is what drives the consumer behavior. There were 72,000 new single-family listings unsold this week, with another 21,000 new listings which were newly listed and then already are in contract, what we call the immediate sales, for a total of 93,000 new sellers this week. That's much more than in any week in the entire last year. So more sellers, much more than in any week of last year. You have to go back to July of 22 to find this much seller activity in a given week. Almost 2 years. So why is seller volume increasing? Where is it coming for? Is it time to panic? So first, keep in mind that the immediate sales are still reasonably healthy level, meaning plenty of homes get their offers and go into contract immediately upon listing. 21,000 this week, that's 22.5% of the new listings. Next, keep in mind that each week there are still 20% fewer sellers than there would be in a normal pre-pandemic year. So there are not a lot of sellers. And it's just that in the last decade, as mortgage rates fell, we started hoarding more real estate and selling less. So you can see the relative levels of the weekly new listings in this chart. This year's dark line is pushing above last year's light red line. The gray lines are years past, and seller volume still runs pretty low because homeowners have such a good deal and they don't want to sell. Fixed mortgage rates means fixed cost for homeowners. Fixed costs mean I don't ever have to sell. But in areas where costs can rise, for example, due to high property taxes or spiking insurance or other maintenance costs, these are homes that are more likely to hit the resale market. And right now, this is most obviously Texas and Florida. 40% of the annual increase, the increase of inventory over last year, has come from Florida and Texas. These two states have 29% of the active listings in the country for 16% of the population. So outsized gains are happening in Florida and Texas. And you can imagine if you have a second home in Southwest Florida that you use only occasionally and your insurance costs, for example, tripled this year, it's very tempting to choose to resell that home. And some people are doing that. The opposite market is happening in New York. New York has the fewest homes available per capita right now. That dubious distinction is usually reserved for California. New York still has slightly fewer homes on the market now than last year, one of the last states, where Florida has 59% more listings than last year at this time. So the takeaway here is inventory gains are pretty much everywhere, but significantly more in the South, from Florida through Texas and actually over to Arizona. There are 398,000 single-family homes in contract right now. That's the pendings count. It's a few percent more than last year at this time. These homes are in contract, the contract pending stage, and they'll close mostly in May. The sales will close in May. So just slight sales growth. This is a very slow expansion. It hasn't yet receded, even with April's jump in mortgage rates. So frankly, I've been expecting this pace to reverse, but we haven't seen it yet. This week, the comparison versus last year is actually just a bit more, like a bit growth. Notice in the total pendings chart here how 2022 sales dwindled in the second half of the year and haven't recovered yet. So in this chart, each line is a year. 2022 is the light red line. And it really illustrates how quickly home sales slowed as mortgage rates jumped, especially in June and September of 2022. So the dark line here is 2024, and the trajectory is surprisingly staying positive. As rates now jump from 7 to 7.5, I've been expecting that slowdown to happen again that we saw in 22. Perhaps, though, if we get lucky and we don't see rates climb maybe into the 8s, then maybe our sales rate will continue to slowly recover just a bit later this summer. Rates could keep climbing, though, and so the macro data sure keeps coming in strong, and we'll just have to watch to see if that happens. But as of right now, there were 76,000 new contracts started this week for single-family homes in the U.S. That's more than any week in 2023. It's good growth. 9% more than the same week a year ago. 9%. So sales volume typically peaks at the end of June. So we hopefully have a couple more months of growth to continue in the sellers market, the selling market this spring. And the weekly new pendings count is already ahead of the best week from 2023, and we maybe have 2 more months of growth to go. The median price of those homes that are in contract is now just over $398,000. That's 4.7% above last year at this time. What we're tracking here is the final ask price for homes that went into contract. This is the earliest proxy for the final sales price, which you don't know yet because it's not sold. So any given home may sell above or below asking, but in aggregate, the sales price is very close to this price of the pending. So it's really useful measure. And we watch several measures of prices, of home prices here at Altos. So There's all the asking prices. What you see if you walk into the market today, the median price of all the homes on the market right now is just under $445,000. It's only 1% above last year. The price of the new listings is the most leading indicator, and there are the price of the set that's being purchased, which is what we're looking at here. So these are all useful indicators for home prices. In this chart, you can see, for example, precisely when home prices fell in 22, in June and again in September. At that time, we had big jumps in seller inventory coupled with sudden spikes, additional spikes in mortgage rates. So home buyers adjusted their purchase expectations and prices dropped. And so I've highlighted in gray the weeks in 22 when home prices dropped, June and again in September. So I keep on the alert now for those price changes to happen again. We haven't seen them yet, but we're on the lookout for this year. As we're on the watch for leading indicators for home price changes, we saw a meaningful uptick in price reductions this week. So 32.5% of the homes on the market have had price cuts. That's up 50 basis points from last week. It's 340 basis points more than last year at this time. This week last year was the last of the decline of the season. Pricing was much firmer last year. This year, price cuts have been increasing for 10 weeks. So it's much slower pricing season than a year ago. It's spring. This is when the most upward pressure on home prices should happen typically. So price cuts, though, are on the rise. And the curve this year, so it's following a very clear seasonal trend, normal seasonal trend. Home prices are not crashing. There's no signal anywhere in the data of price crashes imminent. But there are more homes with price cuts now than in any recent April. So it's a pretty weak signal. In this price reductions chart, notice how this year's curve is elevated over any recent year. And there are more homes on the market now with price cuts than in any April in over a decade. So even though it's not climbing as quickly as it did 2 years ago when the market changed, it's still a little bit elevated. And if you look at the local data, you'll see that it's the Florida markets which dominate price cutting right now. Over 50% of the homes on the market in most of the major Florida metros have had price cuts. Inventory is up. Home prices are lower than last year at this time in those areas. So nationally, though, the data is balanced out by many markets like the Northeast, and so with still very low inventory. So if mortgage rates keep climbing, though, we could see the U.S. with over 40% price cuts by late summer, and that would be a likely negative indicator for future sales prices. Negative meaning home price declines. As of right now, as I mentioned earlier, home prices are higher than they were a year ago, 1 to 5% depending on which measure you use. But the price reductions trend seems like that is poised to slow down. So it looks to me like 2024 will be flat at best for home prices, though I was surprised in 2023. So we'll see if I get surprised again as this year unfolds. But that's why we do this data work each week. The market is trying to grow, but homeowners are very obviously sensitive to the cost of money. And if you aren't watching the data each week, you're probably behind the curve. You have buyers and sellers who have no idea how this market is changing right now, and they need to hear it from you. So if you need to help buyers and sellers see the actual data, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team, and we will help you know how to talk about the market, the local market, with your clients and prospects today. There's a link in the description below to join us. Click that, and let's get started.